Let's discuss about the methods of acquiring an property, plant, and equipment. So the first and easy example is PPE by cash. PPE by cash, which means you pay the cash and you buy the property. Or you can say that I'll pay you after some time and there is a payable against the property, plant, and equipment, and you acquire the asset. This is the simplest accounting treatment ever in the planet Earth. The accounting treatment would be property, plant, and equipment account debited to either cash in case of the outflow, or in respect of you purchase it through payable by payable on property, plant, and equipment. This is the simplest case of purchase of property, plant, and equipment. Now let's drill down and understand some of the complex areas of purchase of property, plant, and equipment, that is deferred payment and exchange of assets. Now let's focus on what do we mean by deferred payment. Suppose I'm going to purchase an asset. The price of the asset is $400,000. If I'm going to purchase it now, I'm going to pay the cash now, I will pay $400,000. That we call it as cash price. However, I've entered into an arrangement with the supplier, the PPE supplier, and told him that I will pay you $500,000 and I will pay you this amount over a period of 5 years. Over a period of 5 years. That is $100,000 each year. Each year I'm gonna pay you $100,000. Is there is any difference? Yes, there's a difference of 100,000. This is the premium that I am paying for delaying my payment today. This is what we call it as interest. This is what we call it as interest, right? You're not paying me now, you're going to pay me over the 5 years, you have to pay something extra. The extra is $100,000 and the extra amount is interest. Now the accounting treatment will be different. Even though we are paying $500,000, the cash price of the asset is $400,000, which means if I would have paid the asset or paid for the asset now, I would have paid $400,000. Hence, the extra that I'm paying is an interest, and this interest is borrowing cost. Borrowing cost under IAS 23. Borrowing cost under IAS 23. If the asset is available for use, then in such a case there is no capitalization. And if there is time available that the asset is available for use, then we need to capitalize some portion of the extra amount that I'm paying. In general case, in general case, entity are required to capitalize at $400,000. In general, they have to capitalize this and they have to expense it. They have to expense this $100,000 that they have paid as a part of the interest expense. To sum up, when you see a transaction that is a deferred payment transaction, where the payment is deferred, you need to look for the cash price of the asset, the price at which the asset can be acquired now without deferring the payment. You need to recognize the transaction at the cash price, assuming that the asset is available for use. If it's not the case, IS 23 will come into picture and apply the concept of borrowing cost. So now we are clear about defer payments. Let's move on to understand the exchange of assets.